the macro when it comes to chemicals, and who better than Ajay Joshi, who's an industry expert, to join in and explain to us exactly that. Ajay, hi, morning. Good to have you on the show. Ajay, there's been a surge in prices for certain chemicals, right? Like soda ash, caustic soda, etc. What's the main reason for that? And you think this uptick is sustainable to begin with?
Good morning and good to be back. I think the surge was very, very spot. It had to do a lot with the Golden Week slowdown in China. Entire China chemical industry was shut. Traders were off the market for last 2 weeks. So if you will see the price trend of soda ash, caustic soda, phenol, acetone, all the commodities basically. Last week of September and first week of October, we saw some surge. But then the second week of October, the prices started stabilizing. And today, I have just gotten the fresh prices from China for caustic soda, soda ash. Again, the prices have started declining. In fact, the soda ash and caustic soda prices are down 3% and 4% respectively compared to last week. So the price trend surge was very, very spot. It had to do with lesser supplies in the market against steady demand. But now the Chinese companies are back in the market. So the price surge would no longer be there, and prices have again started declining for these commodities.
All right. Ajay, I wanted to also get in a sense, because the last time you came on the show, you had highlighted that the China dumping will continue till Q2, as well as with improvement expected by the end of Q3. Is there any signs of abatement of China dumping?
Yes. On China now, the domestic demand is slowly picking up. So a lot of inventory dilution in China is happening. So in case of specialty chemicals or multi-stage derivative chemicals, which are more on the specialty side, there we are seeing some price increase from Chinese suppliers. So this will give very good opportunities to Indian companies who are in that derivatives space. So in that way, China dumping is reducing, but in the agrochemicals space, it is very much there. So for agrochemical companies in India, they will continue to face the brunt of this Chinese dumping in the export market, particularly Latin American market and Southeast Asian market. But for specialty chemicals, now we are seeing that the dumping is going to be less and less effective from China.
Right. The other thing, Ajay, also that I wanted to understand is that we're seeing good export revenue growth for certain contracts, and especially specialty chemical companies. I mean, case in point being Navin Fluorine. Does it mean that finally global demand as well is on the recovery side?
Not yet on the recovery side, to be very, very honest, because in the coming quarter, the US demand will be very, very sluggish. Latin American demand will pick up, Southeast Asian demand will pick up. So we will see some contract manufacturing orders move in faster than the last quarter, like for PI Industries and Navin Fluorine. But there will not be any drastic change in terms of revenue growth with regard to contract manufacturing business. But not Navin. My focus company is PI Industries. With PI Industries, they have a very, very healthy order book. And now they have also gotten into this API, pharma API space also, with the acquisition of a couple of companies. So rather than Navin, I would focus on a company like PI Industries, which is a true blue contract manufacturing companies. They have contracts of patented molecule with 20 plus global innovators. So a company like PI would outperform a company like Navin in the coming quarter.
All right. What's the outlook in terms of Q2 performance? How are you seeing it? Is there any anticipation that we could see guidance cuts from companies?
From global companies, yes. Global European companies in particularly, there will be some guidance cuts like BASF, Croda, Covesto, and all these companies, because the demand still is very, very meek. The prices are not what they used to be last year and previous year also. So from global companies, we will continue to see some pushback. Even the investment decisions by a lot of these global companies have been halted. They were to invest into new capacities in China, in Europe, as well as in America, but they are also not taking any call, and all the decisions have been pushed back by 2 quarters or more, even by the global companies.
Sure. When I talk about valuations, UPL is looking attractive, right, as compared to the other Indian, even as, versus the global peers. Analysts are also very bullish on the stock. What is your own take?
I think my problem is that, most of the time we get sentimental about these chemical companies in Indian chemical industry, but sentiments, they don't care about facts. For UPL, the coming quarter is also going to be challenging because the US demand, like I said, will be very, very slow in terms of agrochemicals molecules. So although from Latin America, due to good El Nino season, demand will pick up for UPL, but the US demand will be very, very sluggish. So I don't know how much they would be able to compensate from the uptake in the Latin American demand for the US demand sluggishness. But I don't see, to be very honest, I don't see any good reason to be that bullish about UPL right now. Next quarter, definitely yes, things will turn around for UPL, but not in this quarter, not in short to medium term.
All right. So, what about the outlook then? Just paint a picture as to what the long term could look like for the next 6 months or so in terms of demand, in terms of pricing. How are you looking at the entire chemical space?
In the next 6 months and after that, we will see price stabilization. Right now, prices are still very, very volatile. 1 week we are seeing price surging, another week we are seeing prices coming down. But within next 6 months, the prices will stabilize. So we will have better visibility in terms of pricing. Second thing is that the demand will pick up for agrochemical companies, for agrochemical formulation companies. So companies like Bharat Rasayan, companies like UPL, companies like Insecticides India, they will see, very, very good demand coming in after 6 months. Specialty chemical company, the recovery will start from the January of next year immediately. They will see much better pricing. They will see much better demand. For contract manufacturing companies, the recovery period has already started. I think I had said this in August also. So with the demand for PI product, demand for Naveen product, we are already seeing that. PI is also working on launching 3 new molecules for the patented companies. So that will again result in some incremental revenue for them. So for contract manufacturing companies, the recovery has already started and it will be onwards and upwards from here only. Agrochemical after 6 months only. For commodity chemicals, after 6 months only, prices will stabilize and we will see some stable demand. So overall, till next 6 months, situation will be dicey for all the sectors within chemicals space, except for contract manufacturing.
Thanks so much for taking time out and joining in and giving us more perspective on the entire chemical space. Time for a very quick break. Do come right back. We'll talk about the earnings in greater detail.